Hi everyone, Happy New Year, and welcome to the Streetwise Property Pulse, your resource for Ontario's real estate investment and financing updates, where we bring to you timely updates and perspectives from leading real estate practitioners, answer your burning questions, and share with you valuable tips and strategies. This is Dalia Barsoum from Streetwise Mortgages. Today's episode is a special episode, as we reflect on what we learned with respect to financing in 2020 and what to watch for in 2021. 2020 has brought many changes to the lending landscape, from unexpected drops in interest rates to mortgage deferrals to changing lending policies in both the residential and commercial arenas. There are many reflections and valuable lessons learned that will not only help us better plan as investors for this coming year, but for many more years to come. Allow me to share with you what the key lessons are. Lesson number one is to always be prepared. It is human's nature to sometimes focus on the urgent and pressing matters, not on the important matters. Investors who were reactive about planning their financing during 2020 and lost their jobs or ran into challenges with rent collection found themselves in a very stressful situation, as they did not have a cushion to fall back onto or any reserves. However, investors who were proactive over the years in reviewing their portfolios on an annual or semi-annual basis and lining up lines of credits and reserves for the rainy day or to position themselves for future opportunities were in a much better position to pivot when the pandemic hit. Despite the busyness of life at times, make time to plan your finances and financing. Heading into 2021, my questions to you are, do you have sufficient reserves, given the number of properties that you own? How are you positioning your portfolio to weather another storm if another one passes by? Lesson number two, think about alternatives and see beyond the immediate need. Mortgage deferrals were introduced by the banks as a relief tool for clients who could not afford their mortgage payments due to a job loss or a financial distress during COVID. In the midst of fear and panic, many investors jumped on mortgage deferrals when they did not really have to. Some investors were worried that their tenants wouldn't pay and that they would lose their jobs. Some even saw them as an opportunity to accumulate a cash reserve instead of continuing to pay the mortgage payments. Everyone was talking about mortgage deferrals, and there was a rush to set them up to the extent that the lenders had to reallocate resources to keep up with the demand. While mortgage deferrals were absolutely needed for some clients who had no other alternatives, many, in my view, were unnecessarily used. Several investors learned later in the game the hard way when they were seeking financing for a purchase or a refinance that the lenders were not approving these applications if there was an active mortgage deferral in place. Some investors also learned that the cost of repayment was higher than what they had initially anticipated. When the deferrals were up, some investors were faced with higher monthly payments on each property they own, and therefore that ate into their net cash flow. During the pandemic, there were other strategies and tools to consider to ease up the cash flow pressures and enhance liquidity as well as hedge against risk. It was just a matter of pausing when everyone was rushing. It was also a matter of discussing alternatives with a qualified mortgage broker and doing your homework regarding the risks and rewards and also acting accordingly. Lesson number three, put some weight on flexibility and pay attention to the fine print beyond just looking at the mortgage rates. Since March, I think I heard the word pivot many more times than hearing my own name. No one was expecting interest rates to take a dive and for lenders to change the rules overnight. Some clients who locked onto fixed mortgage rates across their portfolios and needed to pivot to raise capital or to set up secured line of credits as a cushion or to hedge during turbulent times have had to pay hefty penalties to get their equity takeouts completed or refinances approved, especially when they had to leave their existing lender to switch to another lender due to the changes in qualification rules. Some investors had to unfortunately pay hefty penalties as a result. And some learned the hard way that they were in fully closed mortgages that they could not exit regardless of whether or not they wanted to pay the penalty. In my view, we should all put some weight on flexibility, even if we pay a little bit more for that. Incorporate variable rate mortgages into your current plans and going forward. This is a great time to do so, given that the variable rates are very low, are expected to stay low, at least up to 2023, based on the Bank of Canada's plans to maintain its overnight lending rate until the economic slack from the pandemic is absorbed. This is also a great time to see if it's worth your while to break away from your existing fixed rate mortgage. Myself and my team are happy to help you analyze whether or not it's worth your while to pay the penalty and switch into a much lower interest rate mortgage for the remaining term. As for the fine print, as mentioned earlier, some investors learned the hard way that they were in a completely closed loan. When they needed money, they could not get it out, even if they wanted to pay the penalty. This is why it's very important for us as investors to pay attention to the fine print of a mortgage beyond just looking at the mortgage rate. This includes your prepayment privileges, your ability to exit the loan, and what would that penalty be if you were to break the loan. From our family at Streetwise Mortgages to yours, we wish you a wonderful year ahead, filled with health, abundance, joy, and peace, and one that is full with personal and professional growth. With the demand for real estate expected to remain strong and interest rates expected to remain low, you can make 2021 a transformational year for you and your family through real estate investing. My team and myself are looking forward to supporting your success this year and helping you create abundance, peace of mind, and time freedom. That's it for today. To get notified of our future episodes, please subscribe and press the bell button. I'll see you on the next episode.